Good afternoon, ladies and gentlemen. I hope you can see the slides. I hope that you can hear me okay. I think as I put in the chat box, we've had the odd little tech challenge over the last couple of weeks, and so it would be just great if you could confirm that you can hear my voice and you can see the slides. If you could just confirm that in the chat box, just to make sure that we're starting out on the right foot, that would be very, very helpful, ladies and gentlemen. Much appreciated. Super. Thank you, Mike, Patrick, Daniel, Patrick, Peter. Okay, fabulous. Thank you. That helps. Welcome everybody to ActivTrades Monday Market Matters webinar for the 6th of November. My name's Paul. I'm your guide for this series, and we're here to talk today about how to make the most of the daily chart. And there's reasons for that. Okay, in terms of the daily chart, it's a fascinating chart to trade off. And what we're going to do here today is focus on basically opening it out to those of you who are, let's say, at the beginning of your trading journey in terms of understanding, what its importance and how we can best use it in our own trading decisions. So let's talk about what today. As always, Monday Market Matters. So we'll have a little look at the news for the week just gone, and most importantly for the week ahead. But we'll really just going to focus mostly today on the daily chart. Okay, why is the daily chart so important? What is it that traders need to consider when utilizing the daily chart? And how could you create just a very simple price action trading plan that you could take away and utilize on the daily? And as I said, we're going to focus mostly on basically helping educate new traders in terms of the value of the daily chart. But it would be useful for those of you here today joining us live on the session. It would be interesting to know how many of you here today would use the daily chart, okay, in some part of your trading. Maybe it's part of your, let's say, your higher time frame analysis. Maybe it is the chart that you do all your analysis and all your trading on. Maybe you're an intraday trader and you've never really given any thought to the daily chart, okay? It would be interesting to know, put in the chat box just what your own experience has been. It's always good to get to know an understanding of who is here with us today, and what we can take away, what we can learn from that. And then, as always, we will switch across to the live markets and have a look at what has been what's been a rather interesting week since I last spoke to you last Monday. So lots for us to cover there. Patrick says, I use the daily chart when market is sideways at lower time frame. Interesting. Okay, that's an interesting take, Patrick. Thank you for that. And Daniel says, yep, very often use the daily, as does Mike as well. So that's fabulous. Thank you. Thank you. Mike says I use it for swing trades and longer trades. Excellent. That's great. So I appreciate your own insight there. There's always something somebody can offer. Okay, in terms of when we look at use of any particular asset or resource that we have available to us as traders. So there'll be lots for us to talk about here today. For those who don't know me, my name's Paul. I've traded for many years, traded for funds, traded for clients. Primarily, I like to kind of focus on FX indices and commodities for my own trading. I tend to be a trend trader for the longer term, and then I tend to be a mean reversion or a reversal trader for sort of shorter term intraday trading. So of course, when we're talking about the daily chart, that will of course have an impact, and I'll be able to share some of my own experiences across that as well. I appreciate that we always have new people joining us and for our sessions, and so today is Monday Market Matters, and the whole aim of this is that it's just to help traders start the week in the right frame as we prepare for the opening of the US markets. All right, that will occur shortly. So every Monday, 2:00 London time, what we look to cover is we take a look at the news. Okay, what's the major news to be aware of for the week ahead? Mostly we focus on education in terms of helping you build your own trading knowledge. We always have a little chat and a look at the sort of many ActivTrades platforms and tools that you have available to you as a client. And then, as always, we finish with a look at the live markets as we start into the US session. So there is always plenty for us to cover, always plenty for us to discuss and to try and fit into our time together. So let's have a chat about news. Now, I say it every week, I make no apology that if you're a new trader, I don't expect you to be able to sort of analyze and understand the economic news that is coming out. but I do expect you to know when it is coming out, because when major news comes out from the economic calendar, well, then you will see that that is what will kind of induce volatility into markets, and volatility is a double-edged sword. All right, okay, it can be a great bonus for you when you're on the right side of it, and somewhat challenging, okay, when you're on the wrong side of it. And the best way to understand and work with that is to utilize an economic calendar. There ActivTrades website, and there are plenty out there over the all over the internet. So there's no excuse not to know when that big major news is coming out. It is important to know that. So last week was a rather, for want of a better word, it was a rather chunky week in terms of we had an awful lot of data and an awful lot of the major data that came out, and that's had an impact in markets in terms of, we had FOMC last Wednesday, we had NFP last Friday. They have both, I would suggest that they both sort of changed the sentiment, certainly towards the end of last week, and that's probably easier to view when we look at the live charts in a short while. But there was a great deal of major news, not only in the US but here in the UK, and also across the rest of the world. This coming week is not as data hard hit. Both the quantity and the quality of the news, but there is still elements that are going to be out there that are worth picking up on. All right, there's an awful lot of PMI data coming out today. Tomorrow, yes, you have Chinese and US trade balances that are due, but also we will be having sort of overnight here the Royal Bank of Australia. They will meet on their monetary policy, and that's where people might be starting to get interested, because they might feel that there is a divergence growing between people reading into Mr. Powell's comments last week and interpreting it that basically the Fed are pretty much probably done with rate rises, and it's more likely to be just holding rates rather than raising them. Whereas the RBA, people are starting to think that they may actually have to raise rates again, and it's that difference, that divergence, which is what creates opportunity for traders. So people will be very keen to see how that plays out. Wednesday, you've got German inflation figures, and the Bank of China's, it will publish some of its data as well, especially the same again on Thursday. On Friday, close to home, what we have is the UK GDP data, right? That's released Friday morning, as well as the University of Michigan Consumer Sentiment Index for the US. As I said, there is data coming out this week. It's not as particularly hard hitting as we saw last week, but what we will particularly see, as I said, is that it is important to know when that data is particularly coming out. Okay, and there's as I said, there's no excuse. It's in your best interest to demonstrate best practice by utilising the economic calendar to understand when that news is coming out, because you don't particularly wish to be the wrong side of it. So, Patrick, there's quite a bit there. I'll have a little read of that in a moment, Patrick, and comment if I may. So, as I said, the news is, you need to be on top of the news. Okay, as I said, I don't expect you to be able to analyze it expertly, but it is important to know when that news is coming out. So, let's talk about making the best use of the daily chart. Now, this is my opinion. This is my opinion from years of trading, from years being on trading floors, from mentoring traders, being around traders. Is that, what I very often see is that many private retail traders are constrained by their time availability. Lots of you, and this may resonate with you. Whilst you might like or want to trade full time, the reality is, you might have jobs that you're running, you might have businesses, you might have, young family, you might, or, in cases, you can be caring for parents. What you might have is, whilst you might have a desire to trade full time, the reality is that it is not feasible within your present lifestyle. Okay, and that's not a judgment. That is just a recognition of the lives that most people live. Okay, and so it might well be that, as I said, you might want to trade full time. A reality at this particular moment, and I'm here to say that's okay. All right, there are lots and lots of people who will invariably have a be on their trading journey and have a trading career. Their other commitments, and what I always say as a coach to traders is about it's about finding a way to make it work for you. Okay, it's about finding a way, and there will be a way. There's always a way to be able to manage. Okay, manage your time, manage your resources, so that you're able to engage with markets in a way that it adds to your life rather than being being a chore. Because invariably, once anything becomes a chore, well then your likelihood of sticking with it is limited. So, as I said, lots of people want to do it, but the reality is it's not feasible. So then the question becomes, well, how do you solve this? All right, how can you work with this challenge, and what could you do to basically put yourself the other side of that? And one of the ways is an opportunity in using daily time frame charts. Lots of people I see, who are new to trading. They watch some YouTube clips, and invariably lots of those people there are banging away on the kind of the 1 minute and the 5 minute, 15-minute charts, as intraday traders. And there's nothing wrong with that. I do it myself. But actually, as I said, for many traders, if you're trying to do it in limited time around a busy existing lifestyle, well, then it's finding a way to do it. And one of those ways could be to using the daily charts. And I will use daily charts along with both the weekly and the monthly charts, okay, in terms of longer term positions. But in terms of using the daily charts, well, it means that your analysis can be a much smaller. I've said that it can be in 30 to 90 minutes of a daytime. Some people will spend more time, some people will actually spend less. Some people might, like myself, might actually do more of the work at the weekend, and then basically use very little time during the week on the daily basis, just to effectively to update our trades, just manage our trades. But most of the analysis work is done at the weekend. What it means is, if using the daily charts, well then you can place trades, okay, at the start of the day, at the end of the day, based upon your on your lifestyle. You can also monitor them rarely, okay, or just leave the trade to play out, and so it allows you to invariably almost operate in a way of a kind of almost like set and forget style trading. Because daily charts, place your trades as required, monitor rarely, leave them to play out, okay. It allows you to almost, as I said, set and forget trading. Once you've identified where your entry level is, once you've done your position sizing and identified where your stop loss is, and then you can identify where your target is, it almost allows you to set and forget your trading whilst you go about your busy life. And for many people, the best way for them to operate. All right, and we'll talk more about as we go through. So if we're going to have a little look at the daily chart, how do we use it? What are we interested in? And we will, we'll look at live charts in a while as we move across. But ways we can use the daily chart is to help us just identify the trend, if okay, which is something I'm always kind of keen to get across. Okay, good trends leap off the chart at you. You shouldn't need to force it. If you find yourself forcing it, the reality is it's probably not a trend there. Also, not only the trend, but the general direction, and also an indication of the flow in terms of in terms of which way the market is looking to move, and also the strength at which it is particularly moving in terms of things like, let's see, let's bring up the old pen, things like here where we can see very strong, big strong candles as an indication of the sort of the trend, the direction, but also the flow in terms of the strength of the market there in that way it particularly runs. There are also look at, and that's why I put level 1 and 2, because not only is the sort of let's say the standard support and resistance, but there's also something that's also useful on the daily chart, which we'll look at in a couple of slides time. And then, of course, the daily chart allows you to provide trade entries and also your trade management. Remember what I was saying, identifying an entry place, identifying where your stop loss is, and identifying where your target is. And then you are in a position to set and forget trade, if that is, as I said, what allows you to engage with markets around your particular lifestyle. So let's have a little bit look at more of that in detail and talk about, well, actually, how do I turn that? How do I turn that into a plan? How do I turn that into something that I particularly want to work with? So when I look at that a little bit deeper and start to get an idea of what we can utilize the daily charts for, is that great. In terms of trend trading, we look to trends, and that's the important thing, is clear trends. As I said before, you join me every week, I talk about how it is a case of good trends leap off the chart at you. Okay, so you do not need to basically to force it. Okay, and even in this particular case here, just 1 second. Even in this particular case here, you can see that that is pretty much going sideways there, isn't it? That's pretty much going sideways. There's not really the not really the kind of the there's no real clear trend in there. There might be swings within that, which gives you opportunities for reversal trading. All right, but as a general rule, if you're looking to trade a trend, it should be very clear. And if it's not clear, if you're struggling, if you're not really sure, the likelihood is it probably isn't a trend there. And a very simple way to trade with trends is to trade with bounces off a moving average. In particular, I particularly like bounces off the 50-period moving average. And the good thing about that is that you'll see that that's the red moving average on my own chart. That is a very simple confluence of events where we can start to see a price action in a pullback, in a trend, off a level of dynamic support or resistance. That is what provides you with the opportunity for a trade plan, and we'll look at that a little bit more detail in a couple of charts. Daniel says to use simple or exponential. I tend to use just simple, Daniel. Okay, I am not. What shall I say? I'm not a moving average extremist in the sense that there's only one way to use moving averages. I'm very happy with a simple moving averages, and you'll find on my charts I generally have a blue 20, a red 50, and a green 200 simple moving averages. There's one or two I have on for specific trade setups, okay, but as a general rule, that's what I use. I don't think they're particularly better than exponential or weighted, etc. They're just a simple moving average. That's absolutely fine for me. I only really want, for myself, only want to use them as an indication of dynamic support and resistance. That's what I particularly like them for. So you're welcome there. But also reversal trending, where the trend is overextended, and that's probably easier to describe on a chart than it is to sort of talk it through. But if there's a trend that's overextended where we have a clear reversal pattern, so whether it's an individual candlestick like a key reversal, or whether it's a clear reversal pattern like a double top or double bottom or triple top or bottom, or head and shoulders or inverse head and shoulders. And it can also be a case where we see what we'd call the daily chart flip, and once again, that's a little bit easier to show where we see it on particular charts, which we'll have a little look at in terms of how price can flip off the moving averages, in particular that 50-period moving average. One of the things that I will also talk about, which I won't really necessarily go into today too much, okay, but also how the daily chart can work with the monthly chart. Those of you who saw me talking at the London Trader Show a few weeks ago, sort of delved into that, and I'm going to be doing a webinar again in a couple of weeks' time about that, which I'll add more details on. But I will talk about kind of the months using the daily charts with the kind of monthly level rejections. But we'll look at that in a couple of charts' time as a little bit of a clearer way to operate. So there are lots of different ways to use the daily chart, and I'm not saying that you have to use every single one of those ones I've just sort of commented on. It can be that you just find one of those and which resonates with you, and then you basically shape that to the way you operate. But I appreciate if there's lots of people who are starting out on the journey, it's an opportunity to see lots of different ways that you can use the daily chart, and then we'll talk about which one might actually resonate with you the best. So if I'm going to do that first, the first task is, whenever you bring up a chart, there are plenty of times before, is that the first thing I want you to be doing is drawing in horizontal levels, okay? I tend to use the monthly and the weekly, but let's just keep it simple for today and say you could just do that off the daily. And you could use fractals if required to do that. To have that. Patrick S, could we use weekly rejection levels instead of monthly rejection levels? Yep, I'm comfortable with that. A lot of that is confluence of events, Patrick. All right, namely, if you can identify the level and there's very clear price action around that, that for me is enough to be able to operate off that. But for what we're looking here let's start with the daily chart. Let's just make sure we've drawn in horizontal support and resistance levels off that daily chart. You can use fractals to help if required. I'll show you that on a chart. Why do we still want to draw in those horizontal support and resistance levels? Well, really, for new traders at the start of their journey, you do not want to be buying into daily resistance, nor do you want to be selling into daily close to where your entry might be. Okay, it's just about being a little bit smarter. Okay, you don't want to be buying into daily resistance or selling into daily support levels. However, a little bit like what Patrick said, what we do want is identify, well, that might be a level or an area where there might be a chance to trade a reversal off that support resistance level if we get the right price action aligned with it. It also provides us with a big picture snapshot. And one of the things that maybe sometimes people don't take on board or don't give enough weight to is the fact is that you've got the most eyeballs are looking at the daily support and resistance levels. Now, I appreciate that we live in an automated technology world where, of course, everybody wants to talk about how algos, rule and run the markets, and invariably they do a great deal of it. But in terms of people analyzing markets, in terms of people, operating off markets, you will find the vast majority, the vast majority of eyes, the vast majority of traders are looking at the daily chart and in particular daily support and resistance levels and how price reacts to not only those daily support and resistance levels, but also to big round numbers. So in gold, for example, we've seen $2,000 has been very important. Dollar against Japanese yen, 150 has been the level, of the over the last couple of weeks, etc. These eyeballs are looking at those levels, that's what starts to make these elements become self-fulfilling prophecies, hence why we want to basically understand those levels and be able to recognize and see them and utilize them for our benefit, all right, for our actual benefit. So, this is actually a chart from it's probably a couple of months ago, but the reason is it's dollar yen, and the reason it is because drawing in significant highs and lows, and also where I'm particularly seeing significant highs and lows in the charts, but also let's just draw in here. It also where we can see there are particular kind of big round numbers. Okay, you can see big round numbers there, and looking at how markets react to those. People sometimes think that doesn't happen, but the reality is it does happen, because humans still engage with markets, and humans will still basically chunk down or chunk up data depending on what their perspective, and things like big round numbers will still have a huge impact on financial markets. So I was saying, gold has been around $2,000 at the moment, pivoting there, and so being able to recognize and understand that can be enormously beneficial for us. And that's what we want to do in terms of building. And so this is just dollar yen on the daily chart. Remember what I was saying? I was saying I have a 20 blue, a red 50, and a green 200 period moving average. And in an ideal world, it's a dynamic support and resistance, and also when that flips, that is one of the things I particularly like about moving averages. In terms of they can be places where actually we can take a trade from when we get confluence of events. But equally, also I'm interested to see, because you can see what I was saying earlier was that is that good trends should leap off the chart off you. They should leap off the chart at you. There's not something that you should be forcing. As I said, for new traders, if you're forcing it, if you haven't to turn the chart to make it look like it's a trend, it isn't there. Don't make it harder than it needs to be. But also recognizing how price reacts. How price reacts to big round numbers, that can be enormously beneficial for a new trader. And being able to see, once we start to see things like reversal patterns at significant levels, significant numbers, that is a kind of an area we start to get interested in as on a daily chart, being able to sort of see and recognize those. So here's something new that maybe you might want to take away. And this is something, even though it's useful in the daily chart, it's something that if you're an intraday trader, it can be beneficial to you as well. One of the things we can utilize as well is it's not just necessarily just drawing in horizontal levels of support resistance, but what we can also do is we can also use the daily chart to project forward the highs and lows of the last 2 to 3 months. enormously important because you can see that they can be very helpful to traders because you can see it as particular areas where markets will react at. And what we're looking for is here, let me just bring this up here so we can have a describe it, is that as you can see here, this is a daily chart, and on a platform, MetaTrader platform, whether it be 4 or 5 or TradingView or ActivTrader, we have on a daily chart, you'll see, you'll have the dividers between each month, and what I talk about here is, look back on the previous month, find the low of the month, find the high of that month, and then project it forward. Okay, here I just draw in a gold dotted line forward. But actually what you start to see is that, when you project it forward a couple of months, you start to see, it becomes kind of interesting for us, all right, in terms of how does price react when it's there. You start to see it price reacting at these particular areas, and that in itself can be very, very useful to us to help us with our analysis and to help us with our trade identification, because sometimes, okay, you will see markets may power through them. That's just telling you that that trend is strong and we've got a trend continuation signal. What you might see is that actually markets may reject them, in which case you've got that kind of trend, reversal signal that's coming to us. Or what you might see is just markets may bounce and test them, and that becomes more of a sort of a swing and an intraday trade opportunity. And I appreciate that a little bit beyond the remit of what we're focusing on here today, but it's not a bad thing to be able to just watch, just to be able to see how markets react to the sort of previous month's highs and lows. Okay, just have a look at that. The more you look at it, the more you'll be intrigued by to see how price action plays out there, and actually that starts to become quite a useful tool for us. All right, in terms of being able to analyze the market and also just confirm: are we in a strong trend? Is this a level where price could reverse, or is it just somewhere it could actually just bounce off for a couple of sessions, which is what the intraday trader would be particularly looking for. Just examples of from DAX here, and actually, as you can see, it doesn't take very much. Okay, at the start of each month, looking where were the highs and where were the lows, and then projecting forward those particular levels. And you start to recognize, okay, there's kind of patterns here. Okay, so we can just start to see how. Let's just clear this down a little bit. How we had the high of the month here and projected it forward, and then when we first came up to it the following month, okay, well, what did we do? We rejected it. We rejected it with a very clear bearish engulfing candle, key reversal candle, which basically the price dropped its way down there until it started to stutter. Where did it stutter? Well, it stuttered around the 15,000 level. Okay, and then we actually basically bounced our way up, and we bounced our way back up. Where did we bounce our way back up? Well, we bounced our way up this, which became the high of what was March, then became when price basically came up to it in sort of April time. What we saw was price, you can see the price action there, it rejected off it, and actually we drifted our way back down. And so, as I said, just at the start of the month, just take a few moments, your sort of your favorite trading methods, just identify where was the high, where was the low for that last month, and just draw it forward for the next 2 or 3 months. And what you might start to see is that those levels start to become very, very interesting in the terms of even just effectively this the high at the start of the year. Well, actually, once we broke through it, remember I was saying once we broke through it, well, then actually it became the level of support. Okay, it became the level of support there. Okay, what had been the sort of the year's high also became, once it broke through, it became a level of support. So that in itself is giving you great information, okay, to confirm that even though the trend might be looking as if it's feeble or it's looking as weak, there is still support. The price is still pushing its way through there, and this all starts to become all kind of useful insight, useful information into the market as we're looking at it. So it'd be interesting to know, those of you who are here, okay, in the session and trade it, how many of you actually look at the kind of the previous monthly highs and lows? Okay, is it something that's of interest to you? Certainly for me on my intraday style, my previous days and previous weeks highs and lows are very, very key to me. But equally on the longer term, it's also, as I said, using the daily chart to just project forward the kind of the previous month's highs and lows, can be a useful tool, very simple tool, very useful tool to be able to start to identify levels that might be of clear interest to us going forward. Daniel says, I haven't till now, but it's a great tip. Yeah, it is. And it's very simple, Daniel. Okay. It's very simple. It's just, just drawing forward. It'll, doesn't take long. Okay. It doesn't take long to do. You can do it, but very quickly start to get a very clear, better idea on when markets are ranging, when they're basically in trending, where there are particular areas and levels that the price will start to react. And that's what we're looking for, that confluence of events, 2, 3 coming together at one time and place to basically help put you in the right place. And the interesting thing is, let's say for the shorter term, the intraday traders, just looking at that DAX, is that will actually, when you look at how price reacted when it kind of got to those particular levels. Okay, there was real double bottom there. Okay, off it here there was lots of bullish pin bars there, lots of wicks there. Okay, there was a real 1, 2, 3 bottom before we rallied up there, and here was we can see it's tipping off, it's bouncing off, comes beneath it, puts in a very long big 1, 2, 3 before it basically rallies its way up. And where does it go? It goes travels all the way up towards those previous highs or so. I appreciate we're looking at the daily chart, but by drawing that forward, for shorter term swing traders or intraday traders, recognizing those levels, it is really useful because it can be areas where you'll see price will move towards. And also, as I said, they will move away. And once you start to be able to identify and recognize some just simple price action at, whether it be price action candlesticks or whether it be price action patterns, reversal patterns at those particular, levels, which you can identify off the daily chart, that can be really useful, right? A really useful place for you to look to do business. I'm all for trying to identify. I'm not looking to predict, but what I'm doing is looking to identify areas where markets have to make a decision. Market's going to have to make a decision. It's either in these cases it's going to bounce off it. That's fine. I can trade that. Or that slices through it and then flips it from being support to resistance. Once again, that's absolutely fine by me. I can work with that. All right. But what I want is, as I said, at levels and places where it has to make a decision on what it wants to do. And I'm just looking to take advantage of that, really. That's for want of a better word. So, as I said, task 1 is just make sure you're drawing in those levels of support and resistance. Task 2 is just identifying the highs and lows of the daily chart and predict forward for the next 2 or 3 months. All right, and part 3 is kind of for my longer term trading, I tend to prefer trend on the longer term. So it doesn't mean I won't trade a reversal, but I prefer to trade trends on the longer term. And then I tend to do more mean reversion trade. So what becomes important is understanding the market environment that I'm operating in. Is this market that I'm operating in on that daily chart, is it trending or is it consolidating? That's all I'm just trying to understand. Is it trending or is it consolidating? We love good trends, okay, and I've said it all the time, and even today, okay. Good trends leap off the chart. You don't need to force, okay. You don't need to force the trends, okay. If you find yourself you are forcing it, it ain't. But equally, recognizing when a price might be consolidating. I know some people here might well be really, really good at trading kind of range bound markets. Some people are. The thing we've got about trending and ranging is that markets tend to only trend for 20 to 30% of the time. That's the challenge we have. A lot of the time they are either consolidating, they're range bound, or they might be in transition, okay, where they're transitioning from downtrend to an uptrend or an uptrend to a downtrend. And that can be very messy. That can be very messy, very difficult to interpret for let's say for a new trader. Hence why I say, if it isn't clear, stay away. Okay, go and find a simple trend. There is lots and lots of products for you to trade here with ActivTrades, okay, across asset classes, FX, indices, equities, commodities, okay, plenty there. You're not short of instruments to trade. It's about finding the ones that suit your particular trading style. Okay, you could be the best trend trader in the world, right? But if you only trade euro dollar and euro dollar is in a range bound market, well, it doesn't matter how great your trading system is. Okay, it's about understanding, what is my preferred trading style. So for me, longer term, I love to trade a trend. but it's about recognizing I have to understand the market environment in that. And, you can just do that off the daily chart, right? As I said, off the daily chart, just identify whether are we trending, are we consolidating, and then adapt ourselves, with that in mind. So bear with us a second. And even just looking at that, this kind of Kiwi dollar there, my eyes immediately are, we're in a great trend here, but, then I project it forward, and then basically once price came down to it, what it did is it gave me a big false breakout there with a big bullish key reversal before we trended our way up here, and then we get project. Just excuse my woeful artistry, projecting forward. Okay, the highs, and what happens is we came up to it 3 times. Okay, over the next month or so, before that basically became a triple top before price fell its way down there, right, until we broke the low of that month. That used it as a turnaround spot. So, admittedly, I can just see that do it, but that's because it comes from lots of years of experience of it, and the only way you get good at it is by doing it. And, and it's not that hard. As I said, you could do this, quite a lot of this, you could do it at the weekend, and then just update during the week as and when you have time, okay, based upon your what other commitments you might find yourself with. Excuse me. So, as I said, we want to identify which is the what is that market doing? Okay, I want to understand big numbers like 120. This is pound against US dollar on the daily chart from a little bit last year and into this year. As I said, remember what I was saying is that trends. I'm also very good. Okay, very happy at basically trading bounces off the kind of that 50 period moving average when we're in a trend. We can see here price overextended. That trend is overextended, and we basically put in a bullish key reversal before we basically worked our way up there, and then we're above the 50. And it's no surprise that basically, having come away from 120, the big round number, we came back to it. But those were very clear trends. Okay, excuse my drawing, my artwork. At least I'm a better trader, right? But that is, we had clear trends there. And then what happened, we spend a few months going sideways, don't we? Here, that market's going sideways, and and where, hey presto, where does it start to actually? It's at previous months' highs and lows, right? And just drawing them in, projecting them forward, can make, as I said, a huge difference there. That was that month's low there as well. That was what, February, and so actually, no surprise when price break, and it's no surprise to find that it reversed off those 2 months lows in that gap before recent highs there. And as I said, that can be a very simple way for a trader to operate off the daily chart. If it's trending, well, we find a way to join the trend. If it's consolidating, if it's consolidating range. So, for example, in that month there, we were consolidating a very kind of tight range. That's very difficult to trade, as opposed to there where we were down from about 118 to 120. So about that was effectively just under 700 pip range. Okay, so there was but it is part of, as I said, don't force it. Okay, don't be forcing. There's no need to force it. I appreciate it's very easy for me to sit here and say that, but for new traders, I appreciate that they're keen, you're excited, you want to get onto a trade. Okay, you want to find a trend, and so sometimes your eyes tell you what you want to see rather than what the actual reality is. So always take a bit of time. Always just recognize good trends leap off the chart. You don't need to force it. You don't need to fight it. You don't need to force it. If the price is consolidating, or if it's in a messy transition, that's absolutely fine. Okay, go and find an instrument that's doing what you want to do, rather than trying to impose your will upon a market. So, for myself, as I said, when it comes to look at hunting for trade opportunities, well, if that market is what I'm looking for, am I that sort of 50 period moving average with the price action to support me? That will work. That's what. That is just bread and butter. All right, that is just bread and butter. Just being able to just see, a bounce or a reclaim of, let's say, some of the 50 period moving average, might also be the 20 or the 200, but the 50 tends to be a really good, solid, fair indication of value. And things like, you can utilize stuff like, inside bar bounces. Okay, that can be sometimes very useful for traders, and maybe I'll do a full session on that. Okay, on itself, and then I appreciate that some traders love to trade a breakout. For me, when trading trends, I tend to like to trade pullbacks. You basically you're either when all trading systems, you're either trading a break of a line of support or resistance, or a bounce off a line of support or resistance. I generally tend to like to trade bounces. Lots of people would like to trade breakouts. It's a case of which one works for you. Some people like to trade breakouts. Some people like to trade bounces. I, for myself, tend to rather than a breakout. In fact, I prefer a fault. That's something I particularly enjoy. It is about, if you are in a trend trade, well then, in a good strong trend, that is when breakouts are more likely to right. If the trend is old and it's overextended, well, we can look for a reversal trade, and how you might say is, well, how is it old, Paul? How is it overextended? Well, part of that can be the price action. If we see the prices, if the trend is accelerated, okay, the trend is going parabolic. If it's been going up nicely and then it starts to sort of go vertically high, well, then invariably, it's not going to break gravity, and normally that's an indication that we're coming close to the end before price basically falls its way down. Or alternatively, price has been in a nice downtrend and then basically accelerates and falls. Looks like it's falling off a cliff. Very often that can be the end of it before it reverses off that. So if we're seeing price is going vertical and it's pulling away from moving averages, and then we start to see, okay, very abundantly clear reversal trades, things like price action patterns like double tops and bottoms, triple tops and bottoms, head and shoulders patterns. Okay, that's when they become valid. That's when they become useful for us as a trader, or even just if market is consolidating, we can look for bounces or reversals off particular. That is utilizing things like a key reversal, an engulfing candle, a star formation, a pin bar, etc. And then also, as I said, bounces off what might have been monthly highs and lows. The kind of all thing that underlines these is having this confluence of events. It's having 2, 3, 4 things come together at one time and place to give you an indication that there is a higher probability of price moving in one direction over another. And there's no guarantees, no perfection. It's about confluence events giving an indication that there is a higher probability of moving in one direction over another, and then being able to turn that into a trade plan that allows you to engage with markets and do that, and do it, as I say, do it on your schedule, okay, and whether it be at the start of the day or at the end of the day, rather than just trying to do the odd little bit of trading as and when you might have some time free. And so some examples, okay. This is gold, okay. Gold here from a little bit earlier in the year. We'll have a look at the live charts in a moment. But recognizing, okay, and what I've done here is just drawn forward, projected for the gold support resistance levels are, from what we've seen from monthly highs and lows, okay, identified in the daily chart, and just taking a look at, okay, how often price will move towards those levels, how often price will react at those levels. Remember, we're looking for levels where 2, 3, 4 things come together at a time and place, okay, at a point where price has to make a particular decision here. And I'm always interested, as I said, price is in a downtrend, okay, price pulls back, and that in itself is a nice swing, but then basically, it rolls its way off the basically 50 period moving average. It starts to pulling away. Remember what I'm saying, pulling away from moving averages. And it's a very bullish key reversal. All right, key reversal, engulfing candle, back down. It then puts in another. Okay, it's a double bottom here with a key reversal, and then it basically puts in a triple bottom. Okay, and the triple bottom is still can't get beneath the lows, okay, of that particular month there, and that's that triple bottom right before price flips here, comes up to the 50 and it flips. And where does it go? It carries its way up, falls back, and it comes back to these are the highs of these months projected forward, and that turns, okay, turns from being what was resistance into support, and we're into a very clear uptrend, okay, into a very clear uptrend until we kind of start the month trying to break the previous month's high, and then basically what do we get? Bearish key reversal before price drops its way down to the previous monthly's lows, where it puts in another double bottom before it rallies. And where does it rally to? It rallies to 2000, okay, big number there, and pushed above it but we came back down. All right, and that's, I think, what we're doing at the moment when we look at the live chart. So that chart there, that's just a daily chart of gold, okay, 20 period moving average, 50 period, green 200, drawing in, big round numbers, okay, significant numbers, but also just projecting forward the kind of highs and lows of the month. So that, you can do that to see how does price react when price comes to those levels, because you might be surprised at actually how much there is a reaction there. How much price either just bounces off it, or price actually genuinely reverses off it, or price powers through. Okay, if price powers through and flips it from being resistance to support or support to resistance, that in itself is telling you very clearly, what the strength of that particular trend in place and what it's looking to do. So one example is a bit closer to home, FTSE, okay, and as I said, what I've just drawn in is just, and do this, just drawn in, big round numbers there, okay, and also just projecting forward, okay, projecting the monthly highs and lows from the daily chart and looking at, well, price react to this. How does it, what happens here? Very clear downtrend, okay, you get the low of the month there, but then if you look at it, price can't get beneath that low, all right? It trades through it, but then basically puts in a big false breakout, which is also a double bottom before we start to basically work our way up in uptrends. That basically becomes, a flag pattern before we come down, another flag pattern before we come up, and we have the big round number, and then we start to roll off it, and we can't get back up to those highs. Here becomes support before we basically drop, and we drop down to the month's lows, which is also the weekly 200. So it becomes, I appreciate I can just look at that very quickly because of years of experience on it, but the whole idea is that, just being able to look at one chart, all right, just look at the daily chart of FX pairs, indices, commodities, and be able to start to see actually, when the market is actually telling you that it wants to engage. There was times when it will be times when it will be messy, okay, and that's fine. Say anything about you as an analyst or a trader. That's just the way it goes, okay. And when it is bad, you just leave it. You just leave it alone. So what we're going to do is I'll fly through these because actually I want us to go and have a little look at the live charts as always, right? But I'm hoping even just as a starting block, okay, just being able to look at the daily chart and identify and draw forward, project forward the kind of the monthly high daily chart starts to just give you an idea of areas that you might want to be interested in, areas where there might be opportunities starting to set up for you. And that's and there's ways. There's lots going on, but actually I'd soon have a little look at the live chart on Kiwi dollar there. So just before we switch across the charts, all right, there was no such thing as perfection. Sometimes will break out of a range, okay, bound market, and just start a new trend. That happens to everyone. Welcome to trading. All that's happened is you've just paid for information telling you that a new trend is starting, and that actually might be, what we want to be involved with. So the daily chart is it's kind of fabulous time frame for low maintenance positions and swing trades, but it is important for you to draw in significant levels of the daily support and resistance levels, okay, including the big round numbers. Project forward the monthly highs and lows, identify the market environment. All right, is it trending or is it range bound? And work with the one that suits you. And you can trade trends, reversals, and consolidations off the daily chart. Now, if you're very new to trading and you want specific triggers, well, if you go back into the ActivTrades platform, the webinar archive, you'll find there's an awful lot of price action triggers, okay? So things like engulfing candles, pin bars, star formations, price action patterns. You'll find that there are lots of videos in there. You can listen to my dulcet tones through these long winter nights, okay, as you learn and take that on board. But as I said, there's lots of opportunity just off the daily chart, all right? And it might just take a little bit of time in the morning, a little bit of time at the end of the day, and you can work with that as you find a way to trade around your existing lifestyle commitments. So let's have a little chat, look at them on live markets for the last few minutes. Just a reminder that every Monday, 2:00, all right, what we're going to talk about next, how to improve your trading by reviewing your performance. We'll do a normal bit, but our educational element is about improving your trading by reviewing a key element, okay? Not enough new traders do it. They don't collect the data to be able to review it, but I assure you it's probably one of the quickest ways that you can develop and evolve and speed up, accelerate by keeping good data and then and reviewing your performance to start to trades are and where your sloppy, impulsive mistakes are. Because as a new trader, you will make them. You know, you're human, but the quicker you can identify them and work with them, the quicker you can progress. So we've got a few minutes left, a little bit longer than I expected, but let's switch across to the charts, okay, and have a little look and see what's going on there. So just bear with me, just bear with us one moment, and we'll do that. So, and what we've got is this is actually my dollar profile. So some of you, those of you who join us regularly will know, that's my kind of dollar profile. So what have I got here? Dollar index, dollar against the Swiss, pound against dollar, dollar yen, dollar CAD, euro dollar, Aussie dollar, Kiwi dollar. Okay, just the opportunity to look across all of the dollars. All right, just gives me a very quick insight. And if you're going to be trading FX pairs, well then it is important to have a little look at dollar, just a dollar index to have a look and understanding. So, bang, dollar index. Remember what I was saying is that good trends leap off the chart. Okay, you don't want to be fighting it. Okay, and that's what we had right for. We had a great downtrend, okay, for a couple of months, followed by great uptrend. And but look at that, look at what we've had this last month here on the dollar, okay. Last month, we've had there, it's just been going sideways, very, okay, lots of difficult to trade. We only really want to get involved in good trends, okay, as a new trader. When we're seeing markets going sideways like that, well, invariably what you want to be doing is just letting the and then basically waiting for it to achieve its make its next move, and it looks like we might have started to do that on the dollar here. Just let me see these up again. Just when we see basically, bang, as I was saying, price going sideways there, but actually what we started to see at the end of last week was false breakout, followed by a move down beneath the 50 period moving average. Remember I said the 50 is used as a real good solid, all right, real good solid indication of fair value, okay. What I would be looking at there now is that basically I'd be looking at that as maybe as drifting back up into this level here, the sort of the 20, the 50 kind of rolling over, and then I'd be looking to see do we get basically a lower high there? Because if we do, well then I'd be looking to that as a new trend down 103.50, 200. It would be one of my particular scenarios. So we've had dollar strength, then we kind of consolidated a bit, and now we've actually had a little bit of dollar weakness there. Okay, and there's you can with that as much as you want in terms of understanding the reasons behind it. What we need to be able to see is, well, how do we turn that into a trade idea? And so if we look at some of these other, some of these other dollar charts, we might be able to work with that. Okay. So, bang, even dollar Swiss franc. Okay, the dollar Swiss franc, understanding that we had that strong dollar chart, that strong dollar trend, which basically started from this real double bottom here with bullish key reversal, bullish pin bar, and then invariably, once we flipped the 50, okay, we flipped the 50 there, and then worked where. Remember, I was saying earlier that once your trend starts to get a little bit old, a little extended, or it starts to sort of go vertical, parabolic, well then basically that's when we start to get interested, because actually what we see here is price put in a double top there on the dollar Swiss before basically price worked its way all the way. If you look at that, we've actually had the start of this month, that's a reflection of dollar weakening, Swiss franc strengthening. That's the message we're looking at the moment. That's the message I want to be taken on board, because it's the same when I look at euro dollar. There we go. Super. So, we saw dollar strength, dollar index strengthening, okay, which means that, against the dollar is going to be weakening. That's what we saw. Euro against the dollar, right, weakened nicely. And there was a really nice trend there, okay. There's opportunities to get on board that as price basically pulled its way back, okay, and then sort of started giving you, here you go, flag patterns, pin bars, etc., just working its way down, a chance to change that trend until the trend starts to change. We had a Here we go. Here we go. Inverse head and shoulders, the neckline, and now what we're doing is we're kind of flipping. We're flipping. See how it was resistance here, and now it's flipping and it's turning into support. Okay, that's what we're seeing. The 20 is going to cross 50s there. I suspect what will happen is we will come back do that, the opposite of what we saw in the dollar index chart. That's what I'll be looking for now. Okay, as my particular plan. And let me just get rid of this. What we can also see is, dollar yen, which has been of interest recently. So the daily chart, the dollar yen, and what we've had is, I like to trade strength v weakness, and for most of these last few months, we've had dollar strength, okay, and yen weakness. So we've had just very strong trends, pullbacks there, okay, sort of kind of a 1, 2, 3, difficult to trade, all right. But as I was saying, reclaiming of the 50, and then price just basically working its way up there. And where did it work its way up to? Big round number, okay, of 150. And for those of you who also follow the news a lot, we were talking a great deal about how they didn't want price to basically. So the first couple of times he got up there, it got pushed down. Last week it kind of popped up there, but that was to do with Bank of Japan doing nothing, okay, during their policy meeting. And now what we're seeing is, well, what is price going to do here at the 150? The daily chart, I don't personally see there's much for us to do here, really. Yes, people might say, well, Paul, it could set up a head and shoulders pattern there, which it could, all right, it could. But I think what we might see is actually price pivoting around 150 for a while, okay, consolidating around 50 before we make the next move, all right. But the important thing is, as I said, when a good strong trend is and you want to do it, and actually big round numbers is where you'll very often find those markets will move towards, all right. And if you can identify that beforehand, that gives you a great place and a great opportunity to be able to work with it. So I've come up. The technology is fighting me. Let's have that. Here we go. So Aussie dollar. Now, Aussie dollar's of interest because what we've had a mixture this year of trends, okay? We've had a mixture of trends, and then also a mixture of kind of consolidating range-bound pieces there in the Aussie dollar. And what we did have is, we had really quite strong trends, but actually if you look at that, the last month or two, that has actually been quite difficult. It's actually been quite difficult to trade. Let's just draw in. Let's just project forward. There we go. So that was the low of last month, and this was the high of last month, okay? So, what you can see is you can start to see, well, basically where effectively, here we go, that's where we're up to. What we're up to is the kind of that high, that was the 1st of September. We're up there just underneath that high there. See how prices today, the price action is looking like it's kind of bearish off it. I'll be waiting to see what the RBA talk about this evening, or if there is an interest rate rise. Well, then basically what we'll see is, I suspect we will see Aussie strengthen against the US dollar. So it wouldn't surprise me if we dropped a little bit and then pushed up. Alternatively, we're at this level right in front of a monetary policy meeting. If the Australians come out and they still hold interest rates and say that actually they're worried about the economy and they might actually just hold in case they need to cut it, well, then I suspect we will see Aussie weaken away down to it. So, being able to, as I said, project forward these levels, and then when price gets here, looking at how does the price action work? What is it actually telling me? What is the confluence of events at this moment here? That is printing. It's a bearish pin bar at the kind of September highs, right at the time of a Royal Bank of Australia announcement. So I'll be watching that this afternoon, this evening, to see how does that play out and what does it give us first thing to tomorrow morning. Okay, ladies and gentlemen, unfortunately we've run out of time there a little bit. So I do apologize. Time flies when you're having fun, etc. I hope that has given you a little bit of insight, especially for the new traders, how you can start to utilize the daily chart. What I'll do is, in maybe 6 weeks or so time, I'll look to do a second on utilizing the daily chart. But as I said, even today, even if you just start with, making sure that bring up the daily chart, start to draw in levels of support resistance, start to draw in big round numbers, start to project forward the kind of the highs, okay, the previous month's highs for 2 or 3 months forward, and start to look at how does the price action react at those particular levels. That in itself is a great takeaway homework for you to particularly work on, to actually work with in terms of getting clear on how you can utilize the daily chart you're trading. As always, Paul says, Mike says, so can we get a demo account with shares for MT4? Be nice to do that before a live account. Yes, you can have a demo account. Okay, there is that. If you go onto the ActivTrades website, you'll find that there are there you can actually download a demo, and also you can download. There's ActivTrader, there's MT5, there's MT4. There's also Trading View as well, which is also now available to you as a ActivTrades client. So you are not short of platforms and to work with, but whatever you choose to trade, just as I said, have a little look at this the daily chart, okay, and start to look at these levels and see how price reacts them, because I think you might find that there's opportunity for low maintenance trading with that. Okay, I hope you'll join me next week for when we talk about reviewing your trading performance to help you improve. Until such time, I hope you have a fabulous trading week, ladies and gentlemen, and I look forward to speaking to you soon. Take care, everybody. Cheers.